Hey, what's going on, guys? Hope you're all doing well. In today's video, I want to talk specifically about the Robinhood challenge, what it is, my moves this past week, and what you can expect moving forward. So without further ado, let's jump right into the video. If you guys are new here to the channel, coming here for the first time and you don't really know what it's about, I talk about all things investing with my tips, tricks, and insight into the stock market. So if that's something that interests you and you're looking to increase the size of your portfolio, then make sure you quick jump down, hit that subscribe button, and turn on the bell notification so you can be alerted when new content comes out. I post a ton of different content you're definitely not going to want to miss. And when I talk about this Robinhood challenge, these are videos that I produce each Monday for you guys. So whenever a Monday rolls around, you can expect to see an update video for the Robinhood challenge. If you're unfamiliar with what the Robinhood challenge is, essentially what I do is take $100 each week and invest it into the stock market. My goals and my hopes is to grow this portfolio as big as I possibly can, and then one day hopefully be able to make enough in dividend passive payments that will be able to cover my expenses so I can live financially free. So it is a hefty goal that's going to take a large amount of time to ever be able to accomplish, but this is the foundation and the groundwork that I'm putting in, and you get to experience and witness it firsthand. What I normally do in the beginning of each of these challenge videos is just do a quick update of the Robinhood portfolio. So I'm actually going to open up on the app, and you should be seeing it on the screen displayed real time, exactly what I'm looking at, just so it's full transparency and you know what I'm talking about. So you can see the past day wasn't too great for the stock market. It was a red day all the way around, so there was not much that I could do today. You can see I lost about $17 total today, but I'm not too worried about it. Obviously, this portfolio is definitely geared for the long term, and it's not necessarily my focus to be getting those short-term returns right now. Obviously, it does help out, but nonetheless, over the past week, we are down about $15.30, so you can see that most of that was today. So we can expect to see a relatively good bounce back from this. Over the past month, we are down $8.29, and then the past 3 months we are up positive $136.44. So not too bad. These are pretty solid returns for 3 months, but like I said, it's not necessarily the focus. Here, I'll get right into the focus now that we're talking about that, and that is the dividend payments that are coming in. So you can see that at this point in time, I have several dividend payments that are coming in, and this is exactly what I like to see. You can see I have Johnson & Johnson, Microsoft, ADM, Realty Income, and Coca-Cola coming in. So these are really good things that are recurring for me, that I basically get these payments and then I can reinvest it into my portfolio and just grow it a little bit faster. All the money that I do receive from these dividends is just going to be recycled right back into the portfolio, investing in these solid companies. So the method that I have been investing with, the strategies that I've been implementing, I talk about a lot on this channel. I do things like the dogs of the Dow strategy. I invest in dividend aristocrats, and I also invest in dividend kings mainly, and then here and there I stray from that just a little bit, but for the most part, that's what I'm looking at. You can see this is the outlook of my entire stock portfolio right here. So I'm going to just scroll through it, and if you're interested, you can pause the video and just identify those stocks that I'm invested in right now. But what I wanted to do is actually cover what I did this past week in the stock market. So I'm going to head right into the messages here just to cover what it was. And you can see that the first thing that I did was sell 2 shares of LTC Properties. Now, this was one that I invested in when I first started this challenge. They are a monthly dividend paying company. Their stock was about $50, and I only had 2 shares of them. I basically just wanted to get a little bit extra money to buy a more expensive company. So I figured they were ones that I wasn't heavily invested in, ones that I just didn't really care much about in terms of holding them over a long period of time. I just liked getting those monthly dividends. So I realized that probably wasn't the best reason to be invested in them for. So I decided to sell them to get a little bit more money to invest with this week. And then what I actually did was decide to purchase Walmart. Walmart is a very solid company. Let me jump right into their stock here. They're a little bit more expensive than what I typically will invest in because I only have $100 each week. So I had a little bit extra, and I bought in at $118.94. So in my mind, it's not a bad buying point right here. Their trend has been positive across the board, I'm pretty sure. So that is always something good to look at. And in times of economic recession or a downturn, Walmart is locked in its place in the consumer's mind. They are just a cheap store where you can get quality goods in most cases. So that's why I wanted to go with Walmart. I feel like they're going to be here for a very long time. They've already been such an established company, and they have a nice dividend yield, 2.17% there. So Walmart is one that I've seen a ton of other people invest in. Obviously, it's a really well-known company, and that's one that I wanted to be invested in. So the next move that I actually did this week was invest and get another share of Citigroup. Citigroup has been one that has been doing a really, really great job for this portfolio in terms of how much it's returned. You can see I'm up 11% on this alone, and I have 3 shares currently at an average cost of $66.89. So this is one that is awesome as well. You can see they have a relatively low PE ratio as well. And if you're unfamiliar with what the PE ratio is, essentially it is the dollar value that you have to put into a company to expect to get a dollar back. So every time I invest $9.97 into Citigroup, I can expect to get $1 in return. So that's what that is there. Dividend yield is 2.96%, which is a relatively solid return. So I want to go over my total return on each stock this far. So what I'm going to do is just sort it by the total return of the stocks, and you can see right at the top is Realty Income giving me $16.51. They are my biggest holding in terms of a position in this portfolio, and they make up 19.28% of this portfolio. So that's relatively a lot comparatively speaking to other stocks in this portfolio, and I'm trying to diversify a little bit more from them, but they are a really solid company that's been fueling this portfolio. One thing that's interesting to note is that Robinhood does not actually track the dividends coming in terms of your return percentage. So Realty Income is doing well for the portfolio, and on top of that, they're getting dividend payments that Robinhood is not necessarily taking into account. So that's something that's interesting. Coca-Cola, only 76 cents. I recently bought more shares of them. Coca-Cola, obviously a very, very solid company. Then I have AOS, which I'm actually down $3.34. Something interesting to note is that a lot of these companies I'm actually profiting on. I'm not losing too much money. Below AO Smith is AT&T, giving me a return of positive $12.83. This is one that I would like to beef up my holdings in, get a little bit more AT&T in this portfolio. HPQ is one that I talked a lot about in my last Robinhood challenge video, so if you missed that, make sure you check that video out. Then I have a $22.66 return on Citigroup, $13.76 on Microsoft, $5.90 on J&J. Walmart, I have a return of 33 cents, so that was one that I picked up today. Charles Schwab, $27.72. A lot of interesting stuff going on with Charles Schwab in terms of their acquisition. The entire investing industry as a whole has been shaken up, whether it's Robinhood putting the pressure on these bigger establishments and then forcing them to adapt, with those companies then forcing Robinhood to adapt. So there's a ton of different things going on, and it's really interesting to keep your eye on. So then I have ADM with a return of $5.94. Pretty solid there. Pfizer, I have $7.70 positive. That's pretty awesome because usually I invest in these pharmaceutical companies, lawsuit hits them, and they do so poorly. So that was just one that I'm pretty content with the return on that. Then I have NOBL, which is the only ETF that I'm holding in this portfolio right now. And what that is basically tracking the Dividend Aristocrat family. And if you don't know what an ETF is, it's an exchange traded fund. Basically, it works like it's a basket of these stocks, so you're just super diversified when you invest in the right one. Then I have Altria. Altria is one where, it's a little bit of a morality thing coming in for this one. They are a tobacco and alcoholic beverage kind of company there, so there's a lot of positives with the negatives there. They have a really good management team. Their financials are very strong. They're reshaping a lot of their stuff, restructuring, and it just looks so positive for the stock, but obviously they're in an industry that I wouldn't condone myself, so I have them there at the bottom of the list, still giving me a positive return. So if you look back, you can see the only negative right now that I have in this portfolio as a whole is AO Smith, and they are on a dip right now, so I might actually end up picking up some more of them. You can see their chart, they're definitely on the dip, and there's a lot of room for growth for them. So obviously when you guys are investing, make sure you are looking up your own research. You need to make sure that you don't just blindly copy what I'm doing. It's not going to work every single time, and definitely you need to assess your risk tolerance, look at a couple different things, take into account financials. If you can sit in on some of these company meetings when they're doing earnings reports, it's super insightful stuff that you can learn a bunch from. I highly recommend it. And basically, this is what the Robinhood Challenge is. So make sure you stay tuned for all the updates that I have to come in the future. They're released every single Monday. Thanks for checking out this video, guys, and have a great day.